Well, good morning, good afternoon, everyone. My name is Bruno Roche. I'm currently based in Geneva, in Switzerland, and I lead the economics of Mutuality movement, which is a global movement that started about 15 years ago. I'll come to that in a minute. And before that, I was the chief economist of in a food company called Mars. So the theme of today and over the next 15 minutes, I tried to respond to the question that was asked by the organizer of the forum, and the question is what, again, in a very good question, is how to unlock the power of markets to create a more inclusive economy. And in this question, there are three themes and three concepts that I really would like to develop with you today. The first one is the word economy. What is an economy? I simply say, well, economy is a relatively simple concept. It's all about the management of scarcities. And economy is really busy with the management of scarcities. And over the last 50 years around the world, in the Western world, but also in other parts of the world, in Asia, in Africa, the scarcities have changed completely. 50 years ago, financial capital was scarce, for instance, but natural resources, what we call in economy natural capital, was overly abundant. So at that time, the Western world invented this concept of financial capitalism because they needed to have, they needed to address this form of scarcity. And that was the beginning of what is called the financial capitalism. But today, 50 years later, the scarcities have changed entirely. Nowadays, financial capital is overly abundant around the world, but you have other forms of scarcities, and scarcities are in the area of natural resources, but also in the area of what you call in China common prosperity, and or in other words, the inequality in the economy. And even if global wealth increased over time, the inequality increased even further. So in a sense, today we are at a time when, the economy will have to adjust to this new form of scarcities. And the issue is that today we are still operating in a model, and primarily in the Western world, with a model which actually is still focusing on maximizing shareholder value, maximizing profit, maximizing the creation of financial capital, which actually is completely absurd if you think about it, because financial capital has become overly abundant and there are other forms of scarcities. So the economy should, in a sense, focus on addressing this new form of scarcities while creating a form of capital which is already overly abundant in the ecosystem. I think there is another revolution that took place over the last 50 years. That's the size and power of multinational corporation has increased tremendously. 50 years ago, companies were relatively small size and in comparison to nation states. Nowadays, just the opposite. I have my daughter shared with me a couple of weeks ago an interesting chart which shows actually how many countries have a GDP which is higher than the market capitalization of Apple Computer. And actually, surprisingly, I think there were like 6 or 7 countries only that actually have a GDP which is higher than the market cap of a big company like Apple Computer. It could be Amazon, or it could be another one of these giant company. So it shows actually that the shift of the economic model is going to also require a change of the management model, of the business model, because the business and investors, so what you call here the power of markets, will actually be a critical player in shifting the economy from what is today financial capitalism to another form of market economy. And the third element is also the very fast move to the digital economy, which we call in our team the knowledge economy, which actually is based on digital. And what is really interesting in this journey is that when you want to build an industry or a bank or an insurance company, so you need a lot of cash, you need a lot of financial capital. So the service economy and the industrial economy is an economy which is intensive in financial capital. But if you want to build a Baidu or an Alibaba or a WhatsApp or a Facebook, you don't need as much financial capital as you need to build a service economy business. But what you need is social and human capital, so essentially the individual and the relationships. So we are moving from an economy that was highly financial capital intensive to an economy which is less financial capital intensive, but much more social and human capital intensive. And actually, altogether, the three pressure actually are moving the economy from an economy which is primarily focusing on financial capital to an economy which is primarily focusing on other forms, non-financial form of capital. So that's number one. Okay, now let's move to the second topic. So the power of markets. And essentially, the power of markets includes, in a sense, the business and investment. So essentially, the companies and the investors. But I think actually we are moving into a time and into a period where the power of market, which has been prevailing, especially in the Western world, and market is king. And you probably remember the quote of the early 80s, which says that government is not the solution, government is the problem. And I think we are moving into a period where this will have to be balanced. And I think there are much more markets still remain an important power, right? Business and investors remain an important power, but it is being balanced by the civil society. And especially with the emergence of the social media and also the people being connected with one another, civil society is playing an important role now as a way to counterpower the power of markets. And you can see that actually in how consumers choose brands, right? How consumers choose to consume certain things and not to consume others. And it's interesting to see actually that the younger generation is really sensitive to these issues, and they will not vote necessarily with their politically, but they will vote with their money, with their RMB, with their dollars, with their euros. They will choose certain brands versus other ones. So civil society is an important element of that. Actually is a counterpower to the power market. Also, I think the second one is, and we see that specifically after the COVID, it's the comeback of government and regulation. And government, I mean, without government, I don't think most countries could have been managed through the COVID crisis. So it's an important shift. Government is back. We are seeing actually the power of government, and with government comes a regulation. And I can see actually around the world, especially on the topic of the economy, there is a race between different parts of the world, EU being one, China, and also the US, and to some extent the UK. There is a race towards developing a new form of regulation that actually will force companies and investors to report not only their financial performance, but also their non-financial performance. And I mean, I'm quite close at the moment to, I mean, I'm following quite closely what's going on at the EU level, and it's very interesting to see that the EU will, it is planned that the EU will enforce all companies above a certain level, but the level is pretty low actually. All companies above 40 million euros of revenue will be compelled by 2024 to report their non-financial performance. I mean, there's some discussions about it, but it's very clear that behind this regulation, there is also the philosophy, the vision that the economy should be in service of society, and that actually finance should be in service of the economy. And I think there is also this realization in different parts of the world. And I know China, with the program of the common prosperity, is really at the heart of this. But also the EU is also in my view on a similar wavelength, which is to say essentially the role of finance is to be in service of the economy, and the role of the economy is to be in service of society, in a sense to address the meaningful challenge, the big issues that we face collectively, either at the societal level or at the environmental level. And unfortunately today, we are still in a world where, in most part of the world, where it is the opposite. It's actually the society and the environment which is in service of the economy, and the economy which is in service of finance and finance, which is in service of itself. And this construct has to be turned upside down. And this systemic change will not happen overnight, and it will require government interventions and regulation. And behind government regulation, it's not only just a set of dry principles and processes, but there is also a vision of the world and a vision of society. I think the third element, which is critically important also to counterbalance the power of markets, is education. And education in a broad sense, so research, education, and knowledge creation. And I think we are at a time when we are in the process of rediscovering the natural laws of the economy. The 20th century was the century of the ideologies, and depending on where you were in the world, we were driven by a set of ideologies, especially also in the economy. And I think we are moving into a time and season where we are rediscovering the natural laws of the economy. But the shift from this model, which is ideologically focused, to a model that is natural law driven, will requires a system change. And the system change, as I just alluded to, requires essentially 4 pillars. It starts with education, it starts with knowledge, it starts with understanding the natural law of the economy. And I'm so pleased to see actually that in the business world, in the business schools around the world, there is a real now shift in the way young leaders are being taught on this concept. And I've been working over the last 15 years on this topic, and I'm really amazed to see actually that from China, from Europe, from the UK, and from the US, there is a rising of the awareness on this topic. So education is really one, but also, and I know I'm talking to a group of investors and business people, business and investment are 2 critical pillars to enact this systemic change. And I will come to it in a minute. But it's important to understand that a model that is based on what we call the economics of mutuality is a model that actually can not only have a better impact on society, but also thrive economically. So there is not a contradiction between doing good in a sense and doing well. So when you talk about inclusive economy, which is the third element of your question, I think when we talk about inclusive economy, I think we have to be a bit more precise about what we mean. I think we in order to truly achieve an inclusive economy, we need to move from an economy that profits from creating problem to an economy that profits from creating solutions. And it's about to move from an economy which is based on power relationship between stakeholders to an economy which is based on a reciprocal or mutual relationship between the business and its stakeholders. It also requires that the company is the business model and the purpose of the company is not focused on the company itself, but it's focused on the purpose. So we are moving from a firm-centric to a purpose-centric business model. And in our definition in economics of mutuality, purpose is not to maximize profit. Profit is important, but it's not the primary purpose for business and for investment. The purpose of business is to develop profitable and scalable solutions to the problems of people and planet, not profiting from creating problems. So that's new school of thought, if you like, which is in a sense very aligned with the concept of common prosperity, is a set of principles, methodologies, tools, case studies that shows that when mutuality or the concept of reciprocity across stakeholders, which are material to the purpose, is embedded, when this principle is embedded in the value creation model, then the overall performance of every stakeholders, including the environment, the planet, thrive. So it's very different to a model which corresponds to, well, a model which is based on I make money first, right? I make my money first, and then I share it. This is a charity model, okay? And the charity model works, but it's not as efficient as a mutual model. You know, a charity dollar only has one life. A business dollar has multiple lives. So when you are embedding the concept of mutuality or sharing into the fabric of your business model, then you can expect not only a higher impact on society and environment, but also a higher level of performance and even economic performance, both top line and bottom line. And of course, this transition does not require actually a turnaround in multiple levels of the organization. It requires the adoption of new management practices. It requires the understanding of the ecosystem in which you operate, a better understanding of the key stakeholders, which are not only material to your purpose as a company, but also are material to your own prosperity. It also requires a different definition of performance, which of course includes financial performance, but also includes a new mode of profit construction and financial and non-financial KPI to not only measure, monitor, but also drive prosperity. Today, a financial account, the way it is organized, captures only a third of the value that's being created and or destroyed. So if 2/3 of the value that you create and or destroy are not captured by your management processes, then we have a problem. That's actually the vision we had with the economics of mutuality when we started it in 2006. And it was to respond to the question of the board at the time of Mars Incorporated, what should be the right level of profit? I thank you very much for your attention. It was a real pleasure to be part of this forum. I really thank everyone for making it happen. And I hope I have a chance to meet some of you when I travel next year in China to present my new book, which will be translated by the China Publishing House, and the book, which I co-edited with Colin Mayer, who is a professor at Oxford University, is called Putting Purpose into Practice, the Economics of Mutuality. Thank you very much, and I wish you a great conference. Bye.